Thanks for the opportunity to talk today. I think following on from what Samir's already said and yourself as well, is really to talk about the opportunity when we're talking about the digital landscape in developing markets and particularly sub-Saharan Africa. There is a total change going on, a digital revolution. It's opening up huge possibilities, and particularly for partnerships when it comes to partnerships between fintechs and other companies. So that's what I'd like to look at in my time today. If we could go to the next slide, please. So the key thing which has driven this change in emerging markets, and it's quite extraordinary, is the surge in mobile phone ownership. If you look at this data, which is from the ITU, mobile phone ownership has grown by 540% in the last decade in developing markets, which means there's around 7 billion people with mobile phones in developing markets versus less than 2 billion in developed markets. The key leader in this has been China. If you look back just to 2000, it had less mobile phones than the United States. Now it's on up to around 1.7 billion, many times the size of the US. We've seen explosive growth in India as well. And of course, Africa has grown very strongly as well. And the thing to bear in mind is even though the actual overall coverage in Africa might be 40 or 50%, if you go to any of the large cities in Africa, it is 100%. Everyone has a mobile phone. And in fact, several people have several SIMs and several mobile phones. And this has created, if you like, the base for a complete digital network to be put on top and connecting everyone to the digital economy. Next slide, please. The other thing which is really noticeable has been the shift in terms of innovation globally. This map from a couple of years ago shows that the traditional centers are being actually pushed out by developing markets. Traditionally, let's say the last 10, 20 years, the main fintech hub would either be in the USA, in California, Silicon Valley, number 2 there, or would be in the Greater London area, number 4, or in a cluster in Western Europe. But already we see there's been a huge shift towards China. 3 of the top 5 fintech hubs in the world are in China, which makes it the largest area for fintech innovation. And we also see huge growth as well in hubs like Singapore and Japan. But what doesn't come through in this map is the strong growth in India. India arguably is the second largest fintech hub in the world now. They have over 2,000 fintech startups there. And what is completely missing from this map, which is unfortunately typical, is Africa. If you look at this map here, you would think, oh, there's just 29 fintechs in Cape Town. Not true at all. Could we have the next slide, please? This slide from GSMA at the end of 2019 shows there are over 600 fintech hubs in Africa. And we have huge hubs in Nigeria, South Africa, Egypt, with over 50 hubs. And you're talking at least 10 fintechs per hub. So there is a huge amount of innovation going on across the whole of Africa as well. And this is driving a profound digital change in the population. And the key thing we're seeing here is a complete change in the financial inclusion argument. Next slide, please. If you look at this data here for financial inclusion, it would initially make you think that in Africa, things are pretty bad. The chart on the left, you can see there the average percentage of the population with access to a traditional formal financial inclusion account. That's the blue bars. Africa, or sub-Saharan Africa, the worst performer, with only about 1/3 of Africans having a bank account. But then if you look at the orange bar, that is mobile banking. A full 10% of Africans get their financial services via their mobile. And all of this 10% has been added in the last 5 years, which means every 5 years, another 10% of Africans are being financially included via mobile banking. It's an incredibly powerful tool. And it means actually that it's quite feasible by the end of this decade that we could be seeing 90% financial inclusion via mobile phones. Just to show how important mobile payments are, if you look at the pie chart on the right, that is active mobile money accounts in the world. Nearly 60% of those are in sub-Saharan Africa. You could say mobile money is an African product. It is embedded there. And that means if you bear in mind 100 million Africans every year are getting a mobile phone, there is a huge area for innovation and for partnerships to push out new digital products. Next slide, please. And this has led to partnerships, and quite extraordinary partnerships, between British fintechs and African innovators, which have developed, if you like, Anglo-African solutions to various fintech and Insurtech problems. The most famous, of course, everyone knows M-Pesa, part of Safaricom, which is a subsidiary of Vodafone. It started life as a DFID project of £1 million, looking to try and digitalize repayments of microloans. And over many years, it morphed into arguably the most successful P2P platform ever invented. Over 20 million Kenyans every day use M-Pesa. Maybe 40% of GDP passes through mobile phones. It is an extraordinary success, an Anglo-Kenyan success, and it is also a platform upon which many other things can be built. But it's not just payment platforms. We also see Insurtech and micro-insurance taking off. To give just one example, Airtel and Tigo, they have a series of products they offer for just £1.40 a day, 10 Ghana shillings. Their family care policy pays out a maximum of 3,000 shillings if you were to die or a registered member of your family. It may not sound like much, that's about £420, but that's 3 months average salary in Ghana at an affordable price. They also offer health insurance if you are going to be admitted to hospital with cash payments. Again, that is just about $1.40 a day. So very, very powerful in terms of what you can deliver with Insurtech. And then finally, if we get into the world of IoT, the Internet of Things, connecting FinTech and Insurtech with other technology, particularly the next generation of solar technology. Two pioneers in this field, Mkopa Solar, founded by Nick Hughes, who was the founder of M-Pesa, and Azuri Technologies, currently based in Cambridge. They've sold over 200,000 solar units across Africa. And what's so good about this model is when you sell the unit to them, there's a daily repayment using FinTech, roughly equal to what the household would have spent on kerosene and recharging mobile phones. So basically revenue neutral. But at the end of around 18 months, the person owns the solar unit and has free electricity for 10 years. But on top of that, they have a credit history. They've paid off something. So they can immediately be onboarded then for other kinds of lending, better kinds of hardware, and also insurance and other products. They effectively create consumers out of thin air and make them bankable. And companies like Azuri already have partnerships with various micro-insurance companies. Normally for a micro-insurance company to onboard someone to get a 25-cent payment a day is simply too expensive. But a company like Azuri is already doing 100,000 payments a day of micro payments from clients. To add 25 cents to that literally doesn't cost anything. And so it's these combinations of technology which are proving so powerful. But what is so interesting is we see British companies here right in the forefront, collaborating with African innovators to produce really groundbreaking breakthroughs, particularly when it comes to FinTech and Insurtech. Final slide, please. So the essential point I want you to go away with is that FinTech is already embedded in Africa. You can see from the old lady buying something in a shebeen in South Africa, people topping up for M-Pesa, even a farmer checking the price of tea in Mombasa when he's in his field up in the tea country. Everyone is using mobile, and every year 100 million Africans are getting their first mobile and are starting to join the digital economy for the first time. They all need financial services. They need FinTech and they need Insurtech. And the question really is to everyone here, when are you going to join the party? Thank you very much.
Ted, thank you very much. And I think you really helpfully highlighted there the role that the UK's international development agenda has done in helping to open up a lot of these opportunities. Samir touched on that in his presentation, and just the big focus by DFID to deepen access to financial services across emerging markets, and it's really created a lot of opportunities.
Well, I think it's been a total breakthrough, but I think also what it really shows as well is generally what is so good about UK fintechs is they're very good at innovating. They're very good at being quite open-minded and looking for problems. You know, when M-Pesa was set up, Vodafone didn't go out there and say, we know everything, this is it. They went out and probed. They spent several years trying to work out what is it that the market really needs, which is why they switched their original model, which was just repayments of loans, to P2P. But they also were very humble, and they accepted that it took a number of years for people to actually accept digital money. So I think that innovative and flexible approach of the Brits can meld very well with African innovation and African knowledge of local markets and customs and produce these kind of successes.
Absolutely. So a question on the chat. When looking specifically at Insurtech, where do you see the most immediate opportunities emerging across Africa?
Well, I definitely think everything to do with microinsurance. If you see what Beamer has done with Tigo, but I've seen a number of other companies offering health insurance for as little as $1 a month. Possible to deliver that. And it may be for very specific things, just for medicines and clinics. It may just be for hospitalization, which usually is impossible for most families to afford. But there are so many opportunities there because with hundreds of millions of Africans connected with a digital footprint and also a credit history of making payments, they are all insurable. And it can be done, the money can be collected very, very cheaply or effectively free, and you get very good metrics to actually measure the risk. So most Africans are happy to share all the details on their phone. And there are many ways to get around traditional problems you have with insuring someone. For example, if they don't have a fixed address, they don't have a utility. Well, if you know that their mobile phone is always in the same place between 8 p.m. and 6 a.m., you know that's their home. And that is often enough, actually, to get over issues such as that. So that's what's really needed. And I think the proof of concept has been done many times. What's needed now is hardcore investment and a real effort to scale this.